Have you ever considered the risks involved when using your car as collateral for a loan? This is the world of title loans, short-term high-interest loans that use your vehicle title as collateral. It's a world that many people turn to in times of financial hardship, seeking a quick fix to their monetary woes. Title loans on the surface appear to be a straightforward solution, offering a swift influx of cash when the need is most pressing. Yet they are far from a simple transaction. This type of loan is often pursued by those facing financial difficulties, individuals desperate for an immediate solution without considering the long-term implications. The allure of instant cash can be enticing, but it's crucial to remember that every decision, especially financial ones, come with their own set of risks. So take a moment and ask yourself, but are you aware of the potential pitfalls lurking behind the promise of quick cash? Let's unpack the hidden dangers of title loans, which are often overlooked in desperate times. Picture this: you're in a financial pinch and you stumble upon a seemingly quick fix, a title loan. This is where you exchange your car's title for a short-term loan. But like a siren's song luring sailors onto rocky shores, the immediate relief offered by title loans can mask some perilous pitfalls. One of the most glaring dangers is the astronomical interest rates. These rates can skyrocket to more than 300% annually. That's like a tiny snowball rolling down a hill, gathering size and momentum until it becomes an avalanche of debt. And then there are the additional fees. Late payment fees, loan origination fees, title charges, the list goes on. These costs may seem small at first glance, but they can add up quickly and significantly increase the total amount you owe. But wait, there's more. The risk of losing your vehicle is a very real threat when it comes to title loans. If you fail to repay the loan on time, the lender has the legal right to seize your vehicle. This could leave you without a means of transportation, making it even more difficult to meet your financial obligations and potentially pushing you further into debt. Perhaps the most insidious danger of title loans is the cycle of debt they can create. If you're unable to pay off your loan in time, you may be forced to roll over the loan into a new one, and the cycle continues, trapping you in a spiral of ever-increasing debt. It's like being caught in a riptide, being pulled further and further out to sea with each passing wave. With such grave dangers, it's crucial to understand the real cost of title loans. The immediate relief they offer can be tempting, but it's important to weigh these risks against the potential benefits. Always remember, when it comes to financial decisions, it's better to take the time to navigate the waters carefully than to dive in headfirst without understanding the potential dangers lurking beneath the surface. What's often not understood is the real cost of title loans, hidden in high interest rates and additional fees. To fully grasp this, we'll need to delve into the concept of annual percentage rates, or APRs. In a nutshell, the APR is a measure of the total cost of borrowing, including both the interest rate and any associated fees, expressed as a yearly rate. Now you might be used to seeing APRs in the single digits for things like mortgages or car loans. However, with title loans, it's a whole different ballgame. These loans often carry exorbitantly high APRs, sometimes even exceeding 300%. Yes, you heard it right, 300%. This means that over the course of a year, the cost of your loan could triple. But the high APR is just the tip of the iceberg. Buried in the fine print of your loan agreement, you might find a host of additional fees. One common fee is the loan origination fee, essentially a charge for setting up the loan. Late fees can also be a sneaky addition, punishing you for any delay in repayment. And let's not forget the repossession fee, which you might be liable for if you default on your loan and the lender decides to seize your vehicle. It's easy to see how these additional fees can add up quickly. In fact, they can sometimes amount to more than the original loan itself. To put it into perspective, a title loan of $1,000 could end up costing you well over $2,000 once all these fees and the high APR are taken into account. So, while a title loan might seem like a quick fix, it's important to remember that the true cost is often hidden in the details. As you can see, the cost of a title loan can quickly skyrocket, making them a costly solution to financial problems. Perhaps the most devastating danger of a title loan is the risk of losing your vehicle. It's a harsh reality, but one that must be acknowledged. When you sign on the dotted line, you're not just securing a loan with your vehicle, you're potentially signing over ownership to the lender. The mechanism at play here is repossession. If you find yourself unable to repay the loan, the lender has every right to take your vehicle. It's not a pleasant thought, but it's the cold, hard truth of title loans. The loan is, in essence, a gamble. You're betting that you can pay back the borrowed sum, plus interest, before the lender has cause to repossess. But let's take a moment to consider the repercussions of losing your vehicle. Imagine one day you walk outside and your car is gone, vanished, repossessed because a payment was missed. Suddenly getting to work becomes a challenge, picking up groceries a Herculean task, and dropping the kids off at school a logistical nightmare. A vehicle, you see, is more than just a piece of machinery. It's a vital cog in the machinery of your life. Beyond the immediate inconvenience, there are the long-term implications. Losing your vehicle can lead to job loss, further exacerbating your financial woes. It can disrupt your education or your children's. It can even affect your social life, limiting your mobility and independence. This is the reality of title loans. They're not just a financial decision, they can be a life-altering one. And it's a decision you might have to live with long after the loan has been paid off or defaulted on. The loss of a vehicle can ripple out to touch every aspect of your life. The question then is not just about the immediate financial relief a title loan can offer, it's about the potential long-term consequences. So, is the risk of losing your vehicle worth the temporary financial relief a title loan may provide? Fortunately, there are safer alternatives to title loans. Let's delve into a few options that could save you from the potential perils of title loans. First, consider personal loans. These are unsecured loans offered by banks, credit unions, and online lenders. They usually have lower interest rates than title loans and flexible repayment terms, making them a more manageable option. Credit cards are another viable alternative. While they can carry high interest rates, they're often less than those of title loans. Plus, if you're able to pay off the balance within the grace period, you can avoid interest charges altogether. Next, look into emergency assistance programs. Many charities, non-profits, and government agencies provide help to individuals facing financial hardships. These programs can offer everything from food assistance to help with utility bills, so don't overlook them. Lastly, don't underestimate the potential of borrowing from friends or family. This option can be tricky given the personal relationships at stake. However, if approached with respect and a solid plan for repayment, it can be a lifeline without the risks attached to title loans. Remember, it's always better to explore safer alternatives before resorting to risky options like title loans. Exploring these alternatives can protect your vehicle, your financial health, and most importantly, your peace of mind. So, before you sign anything, take a moment to consider these alternatives. You might just find a solution that fits your needs without the added stress of a title loan. In conclusion, title loans may seem like a quick fix, but they come with substantial risks. They can trap you in a cycle of debt, charge you exorbitantly high interest rates and additional fees, and even lead to the loss of your vehicle. However, various alternatives exist that can provide you with the cash you need without these drawbacks. Knowledge is power. Arm yourself against predatory lending. Thank you for watching. If you found this information helpful, please like, share, comment, and subscribe to our channel.